And another major question is which time frame to trade. Which time frame to trade, whether to trade 5 minutes or whether to trade 10 minutes or 15 minutes, hourly, daily. What kind of time frame I have to choose? So I categorized on my style. So if you are a day trader, you have to go for 1 minute or maximum up to 10 minutes you can go for that. But if you are doing a trade in a daily time frame, you should have some solid mechanical strategy. We are not a good lover of intraday style of trading. We are more of an mechanical trading where we will carry forward our positions every week, every month. As I said, we'll run it as a kind of a business. We'll run it as a kind of a fund. Even the money is very small, we'll treat it as a fund, not as an money-making machine. One thing I just want to point you out, like whenever you are doing in day trading, yes, there is no override risk. But once again, day trading, every day is a different. Every day is a different day. Every day the markets are very different, and your lower time frames, you'll be making money. If you are following a money style, yes, you'll be making money. But if you are following the news, you can't make very consistently every day. Every now and then, it's really challenging from a mechanical point of view to be successful. Whereas, if you adapt to higher time frames, like there are strategies, 5 minutes, even a lower time frame, you used to carry forward for the next day. Yes, in Nifty and Bank Nifty, there are overnight risk is there, overnight risk, and weekend also we do carry forward our positions. Weekend carry forwarding risk is there, but even then, it is profitable. Why it is profitable means those strategies we are adopting is mostly based on volatility based strategies. How many of you know about what is a volatility means? Anyone got introduced to India Mix? Okay. So this is how I classify it. I don't want to go really brief into it. One thing I just want to tell you from this. If you have daily charts, don't use daily charts to do a day trade or a carry forward trade or a positional trade, because you are using a very long time frame. Stop using those wrong time frames. I classified it not necessarily. You can have your own ideas. You can have your own ideas, your thoughts, put into it. Prior to that, just ask yourself whether this style of trading, how many risk will be I will be getting it. Whether I will be able to manage my risk on my own and I will be able to beat it once again. Whether I can, whenever I am getting continuous losses, 3 to 4 continuous losses, whether I can able to sustain those losses. That is the main challenge here, sustaining the losses. So another, this is very popular among MT4 traders. This tells you like MetaTrader every now and then, every year they used to conduct an automated trading challenge where anyone can participate in that challenge. And finally, the best winners who is creating the mathematical models, which is having a high profit potential, will be rewarded. And this picture shows each and every dot represents a trader. Every dot represents a trader who is adopting a different time frame. Some people are using a 1 minute chart, some people are using hourly charts, some people are using 2 hourly, 4 hourly, daily charts. This tells you how the crowd is behaving in a mechanical model. How the crowd, who is outperforming. So look into it. Lower time frame people are making money. So this corresponds to 5 minutes and 15 minutes. Here the outliers are here. Almost they are able to generate consistent returns and very decent profits. They are able to make money in a lower time frames. Whereas if you are looking into the higher time frames, almost your hourly is here, hourly, 4 hourly, 8 hours, 12 hours, and daily charts. None of them are able to beat the lower time frame players. Yes, lower time frame money if your strategy is not going to work it out. But how to stick to a lower time frame strategies? The strategy which I told, like this is an super trend indicator. Normally, once again I'll take a 5-minute chart. Okay, I have a 5-minute chart here. See, in the lower time frame normally involves lot number of trades, and strategy like super trend, it still keeps on making money. Even the 42% winning ratio, it still keeps on making money. It has continuous losses up to close to 12 trades. 12 trades you can expect, 10 to 12 trades you can expect continuous losses. But those losses will be very limited when compared to the higher time frames making in 4 continuous losses. 4 continuous losses in hourly charts will be almost 75% of your portfolio will be gone. Whereas in 5-minute time frame, you have a large number of trades. Once again, the winning ratio is going to be the same, and still you'll be able to make money because of the lower risk involved in lower time frame. Lower the time frame, lower the risk, but not exactly a very low one. You can't trade a 1-minute time frame. Yes, it is profitable then, but you will be losing it to your brokers. So the ideal time frame comes between 5 minutes to 15 minutes. 5 minutes to 15 minutes, maximum hourly. Hourly is once again so risky. So we have to create a model in hourly charts. In trading mechanical trading strategies really challenging for us in an hourly time frame. Finally, yes, we came up with a model. It works with a decent amount of risk, and the strategy is called intraday. We used to post on Nifty and Bank Nifty every day. How many of you are following those stuff in the charts on the website? Okay, great. How many of you find interesting? Intraday. Okay, thanks. So it says like higher the time frame, higher the risk. Means whatever the mechanical model you are trying to use in trend trading strategies, your higher time frame will have a higher stop loss. So 4 continuous losses will end in a loss. Loss of 75% of your money. So we normally don't look into a trading system which gives not more than 30% of 30 maximum 35% in a style of trading. So we plan money like this. We used to say like if I want 2 lots of Nifty, the margin I have placed with the broker is 1 lakh. Just giving an example, rough example. So used to keep money in this way, like money in the sense the fund used to run 1 lakh for trading, and another 1 lakh is to manage the risk. Manage the risk is like, yes, you can anytime you can come up with continuous losses. Continuous losses often make us losses, but still we have to be in the game. To be in the game, to be in the market, to take the further trades, we have to prepare our mind to accept those continuous losses. Anytime the worst case will come. The worst case will come every 6 months or every 3 months it will come. We don't know about it. Market is so random. So lower time frame has lower risk, more trades, but more profits. It is once again we are double confirming with MD for the charts which I shown prior to that. Yes, lower time frame is lower time frames like 5 minutes, 10 minutes, 15 minutes is the ideal time frame. But only key thing here is we have to have a very solid strategy. Not necessarily like you have to use the same super trend. You can come up with your own mathematical model. It's all about statistics. It's all about your programming skills. But if you don't know programming skills, yes, to some level, you can have an edge with these kind of indicators like super trend or an intratrend or whatever the trend trading systems we had taken so far. But if you want to get deeper into mathematical models, yes, definitely you need programming skills. You can program your own custom indicators in MetaTrader, not only in MetaTrader. You can almost all the sophisticated traders like an MT4 or an E-Signal has their own programming language where we can implement our own mathematical model, we can test it, we can do there are many concepts like backtesting, optimization, and walkover testing. Those are advanced concepts. Even a non-programmer can test a strategy.
I request to backside people, those who are standing, please be silent. Make the silence, please.
So I request everyone to, today the time is very limited, so I can't spend you guys time on backtesting or optimization. It's not audible?
No. Suddenly stop.
It's fine now?
No, not yet.
Okay, it's fine now. So I request you guys to spend some time on backtesting, optimization, walkover testing. These are the very useful tools to validate a mechanical strategy. Whether the mechanical strategy works or not, how you will confirm it. Yes? We can do a visual backtesting in MT4 and we can have a confirmation to some level. But even then we have to spend a lot of time in watching the charts, which is simulating it. But statistical confirmation will give you quick results. Will give you quick results in fast forwarding you to the next level of training level and training analysis. And one more thing is, by reading the backtesting reports, by doing optimization, you get to know more and more about understanding the risk rather than concentrating on the profits. So, these are my recent experience with IndiaVix. We normally used to watch IndiaVix every now and then. Even we try to incorporate some mathematical models which use VIX as an external factor. IndiaVix, okay, I'll tell you about what an IndiaVix is all about. IndiaVix is it's a volatility index from CBOE, which is given to NSE to identify what is the volatility in the market. Volatility in the sense, IndiaVix is computed based upon the call and option put, ask and bid prices. So from that, it generally tells how the market is behaving. Anything value about 40, it tells you that market is completely random. Completely random in the sense, completely volatile. You can't expect whether there will be a next day, how it performs, whether there will be a very big gap down opening or there will be a very big gap down opening, and from the point it will recover, and once again it makes 200 points higher. Those kind of volatile days are the one we are looking for. It's said like if you are a trend trader, definitely you have to look into IndiaVix because higher the volatility, more your profits are. Lower your volatility, more the market are compressed, more the compressed markets, more you will be in losses or you will be able to make little profits. But your profits are generally higher during your high volatile days. If you take 2008 crash, during that point market had VIX had shooted up to above 80 levels. 80 level is completely random. Completely random in the sense every day market falls down 200 points and recovers 300 points. Even though over a period of time it looks like a sideways market, but still every day the volatility is there. It drops down, it gaps open. Otherwise it opens gap up and drops down 200 points. There will be a very huge swing in the market. Generally the index tells you how much swing is there in the market and how much we can experience. The current values close to 23, values close to 23 means in the next 30 days we can expect an swing in the market of close to 350 points. The figures came around 350 points because there is a formula to tell you like IndiaVix divided by the square root of 12. that will tell you how many percentage it can oscillate. It's close to 6.6%, it can oscillate, it can oscillate 6.6. So based on that, many option players also looking into India mix, they will decide whether to go, what kind of strategy to adopt, whether I have to use an covered call or butterfly or an iron condor. All those strategies, they are to decide which strategy to adopt. These guys are using India mix as an input. It also, by understanding this India mix, you can understand how the market is behaving. How the market is behaving is once again another factor which has to be incorporated in your mechanical strategies. That's what I believe. Not a plain mathematical models. It's a mathematical models plus your market experience. Market experience, like how certain factors are affecting what volatility has to do with Indian markets. How it is affecting my trend trading strategies or my mean reversion strategies. Whether it has any impact, any correlation. But if you are looking correlation between your US markets and Indian markets, you can't have a valid strategy. It's all about human perception. If Dow Jones open above some 300 points, it ends there with 400 or 500 points. We, as a human being, once again expecting our Indian market to boost up. Yes, it will once again, maybe because of global factors or news, it could be popped up. But how to strategize it? Is it possible to strategize it? No, no way. You can't correlate Indian markets and US markets. If you are trying to do that, it's a complete foolishness. You have to do that. You just have to avoid it. What we can do is we can correlate India mix, because India mix tells about the market behavior, and then it takes inputs from Nifty options and put and call bid prices. It once again correlates it. It tells you how the market can be in the next 30 days, so that we can decide. So what normally we do is whenever India mix is going below 15 or 18, we normally stop our trade. Don't do any trade because we don't want any losses and little profits. We're normally interested in playing the markets when markets are in a situation where we can be able to generate money, right? So yes, there are a lot of studies there. So just go and understand what India mix is all about, how we can use in our trading analysis, how it will help in my style of trading strategies. It's all about your perspective. How to understand the market behavior. Understanding the market behavior is a different subject. And once you understand it, you can have few more conditions, few more mathematical rules you can incorporate in your mechanical strategies to find to some level. Control your losses once again, not predict it. Not to predict it, but once again to control the losses. So equity curve. How many of you have an idea about what an equity curve is all about? Okay, it's nothing but a concept is very simple. The equity curve nothing else about it's not a strategy, nothing else. It tells you how your money is growing if you are adopting a particular style of trading strategy. Say next year, we started with 1 lakh rupees. You can say 1 lakh rupees. And how it is affecting. By understanding the equity curve, if you are backtesting, it will finally end with it will give an output as an equity curve. Equity curve tells you about what are the risks involved in it. Once again, it will tell you. But everyone's dream is to have a continuous equity curve. They want their money to grow from here to there. They don't want these kind of chunks happening here. Yes, these kind of chunks will be happening. If you have a right understanding about market behavior, you can incorporate into your strategy and you can control it to some extent. To some extent, you can control it. says once again, as I said, more the risks, more the money. If you are adopting a mechanical model strategies, which is going to favor you in your side of trading. Whereas lower the risks, stop your trades. Stop your trades, feel free, enjoy the sun. So, drawdown, this is another factor we used to keep watching. There are a number of factors. We used to call this KPIs of technical analysis. KPI means generally means key performance index. We used to track how the equity curve is. We used to track how the drawdown is. Drawdown tells you only about the risk once again. It will tell you at some point of time how many losses you can expect from the system. Say, in this graph, it will tell you about from the peak. Say I am starting with my 1 lakh of money. I keep on growing from 1 lakh to 2 lakhs, 2 lakhs to 3 lakhs. From 3 lakhs to 4 lakhs. And from 4 lakhs, I got a loss up to 3 lakhs. Means I lost, from the peak I lost 1 lakh money. But from the peak, from the 4 lakhs, I lost 20% of the money. So, it means like there is a 25% of drawdown. Generally, drawdowns are mentioned in percentage terms. So this system, there was some system, I don't want to name it, there was some system which makes at some point of time there is a peak loss of 36%. So once again you have to ask yourself, if I am going to follow some strategy, what is my drawdown? Because drawdown, by understanding the drawdown, we can plan our money. By understanding the drawdown, we can plan our money. So that we can separate like 1 lakh for trading and another 1 lakh for managing the risk. These kinds of factors will be decided based upon the drawdowns. And every mechanical trader idea is to control the losses. I mean, control the percentage of drawdowns. Any trading system which is having a 20% drawdown is a wonderful trading system. Trader is a wonderful trading system. So if you are someone else is selling you some trading system, you should ask, what is the backers results? Can you provide me the backers results? What is the drawdown of the systems? Yes, there are a number of factors, but these are the main two key points has to be watched. So if someone is blindly telling like this will give you 80% of winning ratio or 100% winning ratio, 95% money making machine, you have to ask those people like, can you provide me the backers results? Can you provide me the backers results? And can you give me what is the drawdown involved in it? What is the drawdown? What is the risk? What is the risk? And ultimately the risk matters. So, how many of you have gone through the drawdown so far? Drawdown? No? Yes, it's time to learn, guys. It's time to know about drawdown. So that's the way we can succeed the market without predicting it. I am really tired of predicting the markets. I don't want to be. I don't want to predict the markets. We simply play with the rules. More get disciplined. Get understand about trading analysis concepts. Trading analysis concepts in the sense not textbook indicators. Yes, textbook indicators are the introductory part, but it is not the way to make money. It's definitely not the way to make money. If you're making money, yes, you are in a monkey style of trading. You are in a monkey style of trading. Very randomly you are taking the trades. You are taking only whenever it is working, you are making the money. But when you are continuously trading the strategies, you will find you are losing yourself. And we have a few more sessions to go. In the second part, we will handle it before our break. Yeah.
Break for tea, but before breaking for the tea, I just wanted to introduce somebody with you people. During the break time, I think that's the best time when you can utilize the discussion or maybe the things to be discussed among yourself. So there is, see, with our software, I'll tell you first about me. Like, we are a software company called Alphametrix FD4 software. We are in the business from some time. Then there are some clients, those who are using our software. I wanted to introduce few of the clients with you people. But there are only, I think, one person here. He is Mr. Madhusudan. And I'll request Mr. Madhusudan to come please here.
Lights.
Light up. On. Mr. Madhusudan is a professionally, is an HR in Infosys. He was working with Infosys for I think 7-8 years. Then he was trading also in the like part-time and all. Then now he has decided to be a professional trader, and he is trading with us since I think 6-8 months. He's one of the person who has made consistently profit with us. So we just wanted to introduce him and want to give the mic to him. He can say something. Please.
Can we have the lights?
Hi. Okay, what Rajal said, that consistently making profit, yes, maybe now, but I lost money also. So let me just give you a little bit of background of how this whole thing happened. As I said, I had a corporate career. I was working for Infosys more than 15 years. So after 15 years, I said I need to do something on my own. So I started, running my own company as a professional HR consultant. Worked there for 1 year, did that. I was still not satisfied. I said, I'm still not doing something which gives me a lot of excitement, less satisfaction. So I've been a trader off and on. I used to have a portfolio. I used to buy stocks and just keep it as it is. Did not look at it at all for the last 15 years. Whether it's making money, not making money, doesn't matter. Just have a portfolio of stocks. Blue chip companies have just invested and kept it as it is. ICICI Direct used to keep calling me and say, okay, you have all this stuff. Why don't you start trading? And we will help you out and etc. etc. So sometime in April or March, April this year, I said, okay, let me do some this and as a part-time thing. And I said, I don't want to just blindly go into it. I want to learn something before starting doing this. Although I had a fair bit of idea what is stock market. So I went and attended some courses through ICICI Direct. Got a basic idea about what is fundamentals, what is technical analysis, what is futures, options, currencies, etc. etc. I said, okay, fine. Now I learned everything. I'm sure whether you saw that 5 stages of trading, unconscious, incompetence, etc. etc. So I was in that stage. As I went and learned, did some courses, learned everything. I said, now I'm confident, let me do it. So from April till August or so, I did a lot of trading. I kept aside certain money and said, I'll use this money and let me see, even if I use this money, it's okay, but I want to use this as a trade. I lost 5 lakhs. In the period of April till August or so, I lost 5 lakhs of rupees. Whatever I had kept aside, I lost it. Then I said, okay, what should I do now? 5 lakhs is a big amount of money. Should I go ahead and continue this and be a risk of losing more money, or should I do something else? And fortunately, Abhishek Mukherjee from M-Zone was one of the trainers when I did that course in ICICI Direct. So I was talking to him, and very coincidentally his office was in the same building where I was working earlier. So I went and started talking to him, had a brief, quite a long discussion about it, and he was talking about this new trading software called Alphametrix before. So I said, okay, let me do this. So sometime in July, August, I think I went and subscribed for this software. So, and even then, to tell you very frankly, I was not very disciplined. I think one of the words that is very clearly written there is always have discipline. So I was not very disciplined. I used to follow the software and take trades, but sometimes I used to use my own brain. As somebody said, follow the US market, listen to the TV channels, read the newspapers, and start making your own assumptions and decisions. And there again, I started losing money a little bit here and there. But then I said, okay, let me be a bit more disciplined. And being an HR person, I think that is one thing that I keep telling other people, you should be disciplined, you should do this, you should do that, etc. So last 3 months has been exciting. And I have made more profit than losses. Approximately on average, I have been making around 1 lakh per month, which I feel is a good start. I don't want to stop at this. Now I have the confidence. Maybe I have not reached that, what is it called, unconscious competence. The final stage, I have not yet reached there maybe, but I want to reach there. And I think what I have learned about this is system is very good. And as long as you're disciplined and patient, okay, and don't worry about the little bit of losses here and there. The system is good. You can make money. And I have left my corporate job after 15-20 years, and I'm going ahead with this and want to become a successful trader. That's all I want to say. Thank you. Sorry?
Which script you are done?
Software script.
Which script you are done?
So the detail will be mailing to everybody the soda sheet of Mr. Madhusudan. We'll be mailing all the soda sheets to everybody through mail. What will you do, Mike? See what I'm trying to say. We can mail the soda sheet which we have recently got. I think there is some Excel sheet problem and all. So we'll be sending to everybody. We have got your email IDs. Don't worry about it. And the software demos is also available. Those who have attended the seminar, that the same thing will be showing to each and everybody. Like, okay, just one more thing. I would like to invite Mr. Kishore NC here, just our CEO and Managing Director. Actually, we had a plan to do something else, but it's okay now. I request Mr. Kishore to give one moment to Mr. Madhusudan, please. Thanks, sir. So we'll break for 10 minutes. I think the snacks are ready, so you can enjoy the snacks, and we'll again rejoin after 15 minutes. I think it is 6, 7, so we can rejoin at 6:20, 6:25. We can start, we'll listen something more from Mr. Rajendra. Thank you.